So I think in quieter moments, maybe even, behind closed doors at even the Fed, there's probably been some whispers about, well, what if we go to the new system, how important would gold? So my take is, as objective as it can be, is that gold is the monetary hitching post of the universe. It's the ultimate money. And I think it's used as reserve for everyone, including China and India, a last resort. If the CBDC doesn't float or get the adoption that's required for the central bankers to be happy that they have put us into the new system, that they have this ace in the hole, meaning gold, that they can use as a carrot to push the system forward.
There is no denying that the current macroeconomic backdrop is fueling a perfect storm for gold, cementing expectations that prices are now firmly on track to score fresh all-time record highs. This scenario could become a reality by the end of this month, if not sooner. The dollar's purchasing power decreased by 2.53% from 2023 to 2024. That's not an anomaly. That's the decades-long trend and reality. DavidMorgan, a widely recognized analyst in the precious metals industry, highlights that excessive currency printing historically leads to a return to the gold standard. Concurrently, Morgan notes central banks' ongoing gold accumulation, suggesting gold serves as their backup plan amid reliance on unbacked modern monetary theory. Even with the 6-month pause, the PBOC has purchased over 34 tons of gold this year to maintain its crown as the world's single biggest gold buyer in 2024. However, despite the increase, gold only represents 6% of China's total bullion reserves. A growing consensus of Wall Street's most powerful institutions believes China is planning to increase its gold holdings by an estimated 15%, if not 20%, of its total bullion reserves by 2028. While reflecting on the market, Morgan suggests that gold could serve as a plan B for the Federal Reserve, with CBDCs and cryptocurrency potentially being backed by gold to stabilize the financial system. A gold-backed currency would require large gold reserves to support the money supply and maintain fixed exchange rates. Since the United States has the largest gold currency reserve, the US dollar would be the prime instigator, possibly in a Bretton Woods-style reboot. Fundamentally, Morgan states Dr. Judy Shelton's idea of tying treasury bonds to gold to restore monetary discipline. He suggests massive inflations often lead back to gold and believes similar discussions may occur privately within the Federal Reserve. Now we present the clips of DavidMorgan's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
This is a little tricky, because it's hard for me to not be biased, because I am. I've been looking at monetary history for most of my life. And, usually when you get in the situation that we are in now, where currency is failing because there's so much printed that people don't trust it, you go back to some type of a gold standard or sound money principles. However, this time it's a global phenomenon because the dollar reserve currency, being a dollar, is failing, but it's failing less against other currencies. So my take is, as objective as it can be, is that gold is the monetary hitching post of the universe. It's the ultimate money. And I think it's used as reserve for everyone, including China and India, as a last resort. I think that if the CBDC doesn't float or get the adoption that's required for the central bankers to be happy that they have put us into the new system, that they have this ace in the hole, meaning gold, that they can use as a carrot to push the system forward. So in other words, a CBDC that's tied to gold some way, shape, or form. That's my take. There's others that think along those same lines. Is that exactly what they're thinking? I don't know. But it is interesting because you got to look at the facts. And facts are to keep accumulating. Well, they're going to a MMT, modern money theory, where you just print and it's not backed, and that's what they want. They stated so. Then why are they buying gold? I think the logical conclusion would be because if it doesn't work, they have something to fall back on. But most people that are crypto investors or speculators, I'd say for the most part, are aware about a fiat money system. And yet when you look at what a lot of these cryptos are, is they're just some digital fiat, which the dollar really is. I mean, we still have physical pieces of paper, but that's such a small percentage of transactions, it's almost not worth counting. So now you've got gold behind it with HSBC and others. So you got the mainstream, and you also have the alternative financial system. So I think that's the direction it's going. I mean, I made a very bold prediction right or wrong, I suggested that the next major leg up in the cryptocurrency will be based upon asset-backed cryptocurrency. So it could be cobalt, could be real estate, could be oil, could be energy, it could be gold, it could be a lot of different things, but where there's something real attached to the token. And I think that's the direction it's going to go. So falling back to what I said a moment ago, ace in the hole, that gold backing that could take place, maybe they just want to do it in two steps. You know, they've already planned it out that, you know, they're going to throw it out there with no backing, with the plan B being as soon as we get this much resistance, we'll come out with this campaign and everybody will fall in line because it is tied to gold. I don't know, but that's just my thought. I was lucky to interview Dr. Judy Sheldon on, her book on, using the treasury bond market tied to gold to kind of put some credence back into the system, some discipline back into the system. The further you go down these trails of massive inflations where they end in a bad way, usually come back to gold, as I said earlier. And I think that's probably a likely scenario. How that manifests remains to be determined. But as you just said, when you got an HSBC, you got others that are throwing them out there, that idea starts to compound. So I think that, in quieter moments, maybe even, behind closed doors, that even the Fed, there's probably been some whispers about, well, what if? And that what if being, if we go to the new system, how important would gold be? Could it be? What would it do? Could it solve the problem? Would it be better recognized and adopted? And all those kinds of questions. I mean, right now, there's pushback in several states in the United States that at a state level, so we don't want to accept CBDC. And I'm on that side.
Regarding silver potential, DavidMorgan mentions it is in a consolidation phase, driven by market uncertainty due to the upcoming Trump administration's fiscal policies. He expects the market to remain indecisive until there's clarity on policy changes. Gold and silver prices fell again in London on Tuesday, trading down to 1-week and 2-week lows, respectively, ahead of tomorrow's Federal Reserve decision on dollar interest rates as the blowout in New York futures prices eased further despite ongoing fears over the impact of Donald Trump imposing blanket trade tariffs on all imports to the U.S., including bullion bars when he returns to the White House next month. Although the gray metal continues to respect the trend of higher highs and higher lows, bullish momentum is fading as the spot price approaches the 200-day simple moving average at $29.55. In 2025, Morgan predicts a sideways market until more clarity emerges, with possible weakness in shares due to tax loss selling. He expects a lackluster first quarter but anticipates a bounce by March, especially in equities, as investors re-enter after tax selling. Let's get back to the interview.
Silver's under the 50-day moving average. I think we're still in the consolidation phase. I think we're still going to go sideways in what I call an indecision pattern. And I think indecision pattern is a good name because with Trump coming into office, there's a lot of uncertainty, which there always is. But now with the new administration, how many changes are going to take place immediately that the old administration put into place that kind of cancel some of the Trump ideas in the first time they were in. So I think the market's just going to kind of wander back and forth until there's some clarity to what's going to happen on the fiscal responsibility, what kind of real cuts are going to be in the federal budget, what kind of difference will it really make? Is it mostly talk and no action? Is there going to be a lot of action? So I think the metals are just signaling they don't know which way to go until there's more clarity in the market. Yeah, I think patience is required. I mean, we're going to see the sideways move I said earlier into the end of the year. I think you see more weakness perhaps in the shares due to tax loss selling and squaring the books on not only individual accounts, but money managers as well. And I'm thinking that you may see kind of a lackluster first quarter of 2025. You usually get a pretty good bounce in the metals, at least by March. A lot of times you'll get a big bounce in the equities because they sell off too hard. People wait their 30 days, 31 days and rebuy them, and you get kind of a lift in the equities. You might see that. But overall, I don't think you're going to see a lot of emphasis into the metals, either in the equity side or the metals themselves, due to what I said earlier. With the new administration coming in on the 21st of January, and just the market being kind of in a paused wait and see attitude. So that's what I expect.
For ages, gold has been recognized as an everlasting source of value, offering stability and security, notably amid uncertain periods. A bottom is expected in January, with gold likely testing $3,000 by March or April. Do you think central banks' continued gold accumulation is laying the groundwork for a new gold-backed monetary system? If so, how might this affect global markets? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.